Good morning, everyone, and welcome to our Festive Insights presentation for you this morning. For those of you that don't know me, my name is Dee Pwc, and I'm the Chief Operating Officer here at New West End Company. As part of my role, I'm delighted to head up our Insights function, which, besides everything else we deliver to you, provides you with our monthly Insights report courtesy of PwC. These monthly reports incorporate sales, footfall, international travel, and our qualitative consumer research that we do on street once a quarter. Whilst we pause these reports during lockdown, we are delighted to have relaunched our revamped reports from May of this year. So we have an absolutely packed agenda for you this morning. First up, we have Matt Shields, Retail Director from Watches of Switzerland and the Chair of our Occupier Steering Group, followed by Gavin Barwell, PwC Government Advisor, who will be giving us his economic outlook. Then Jacqueline Windsor, PwC Retail Sector Lead, who, as best as she can, will be looking forward into the retail sector. And our last guest speaker, many of you will know, is Megan Higgins, PwC Retail Director, who will be providing us with a summary of insights and trends based on our data collated and our reports from this year. We will be running a Q&A at the end, so please do get your questions in the box below. So now I'm going to hand over to Matt Shields, Retail Director of Watches of Switzerland and a participating member of our PwC Insights reports, to give us a little bit on how he uses the reports in his business. Matt, over to you.
Thank you, Dee. I hope you can all hear me okay. Firstly, I'd like to thank the New West End Company and PwC for hosting this Festive Insights session, which I'm sure will be of great value to our membership. I wanted to take a few minutes to share our experience of joining the PwC Insights programme, which will hopefully help any businesses out there to sign up to the programme who are yet to do so. I'm sure, like all of you, market information is key to driving our Watches of Switzerland Group strategy. We are in a data-centric world where instinct and gut instinct will get you so far. However, empirical evidence and data is absolutely king. Knowledge is power, but more knowledge is even greater power. And we are in the midst of an ever-changing retail landscape and evolving customer behaviour. Therefore, we really need to understand trends and nuances in the market in order to drive strategy. And the PwC Insight programme really does enable us to share key information anonymously to the benefit of participants. However, it's key that we garner as much insight as possible in order to ensure that the outputs are meaningful. Confidentiality could be a barrier to entry, which I can fully understand, which our group we managed to overcome. We're under public ownership and governance here at the Watches of Switzerland Group. However, our board and PLC audit team, once familiarised with the programme, agreed there was no compromise for the business. And the New West End Company and PwC can assist with breaking down the confidentiality barrier, should you need this. Another barrier to entry could be the perceived effort required to share data. And again, in our experience, PwC really do pick up the legwork here. We experience minimum effort and workload from our teams each month, and it really is a seamless process. In order to maintain optimum benefit from the programme, we really do need a critical mass and majority inclusion of occupiers. To derive benefit, we require high participation from many members as possible. I'm sure that we all agree on the importance of understanding environmental factors that impact or influence our business and decision making. We need member stakeholders on this call to overcome perceived barriers and to influence your businesses internally to participate in this initiative. PwC are there to support with any questions you may have and to become comfortable with the process, as they did in our case. In terms of what's in it for you, if there was one thing that the pandemic demonstrated to the commercial world, is that those businesses which adapted, pivoted, and reacted to market conditions not just survived the pandemic, but even flourished. The PwC Insights programme really does provide us with the opportunity to learn from each other, adapt our strategies to evolve within the market, and gain a greater understanding from the nuances of the district. If we can garner all of your support, this programme really will be a game changer. So thank you all again for joining us today. Please do let us know if you have any questions, and I'm going to hand over to Gavin.
Thanks, Matt. It's a pleasure to be with everybody this morning. What I've been asked to do is just to give an overview of the economic position in the country as a whole at the moment, and then Jacqueline is going to follow on from me and look specifically at the issues facing retail. So I wanted to start with the good news before moving on to talk about some of the concerns that the Chancellor and his team will be privately worried about. We obviously had a budget recently, and at that budget, the Independent Office for Budget Responsibility set out its latest economic and fiscal outlook for the country. And the good news there was that the economy has recovered much more strongly than they expected the last time they produced one of these outlooks, which was back in March at the time of the spring budget. And if you look at this chart here, so you can see the green line is how the economy would have performed without the pandemic. The yellow line is what their forecast was at the time of the March budget. And then the blue line is the October forecast, and the dotted line just above it is actually the latest data that they weren't able to take account of in producing the forecast that the Chancellor officially relied on. So there's a really encouraging picture there that the economy has proved more robust in terms of its overall recovery than was anticipated. But the 4 or 5 slides I'm now going to run through are just setting out the macro concerns in terms of the environment in which we're all operating. The first is one that I'm sure you're all very familiar with, which is a whole suite of supply chain issues. The causes are much more complex than some of the media coverage would lead you to believe. So some of them are global factors. The impact of the Delta variant of the COVID-19 virus in Asia has definitely affected output there, and that is certainly having a factor. We've then got some specific UK factors that are related in part, at least, to Brexit. So introduction of friction, at least UK to EU at the border, has certainly had an effect. There is a general issue in terms of labour shortages, which is not just a UK problem. Most economies are experiencing it, but it's obviously made more difficult here in the UK because we no longer have access to free movement within the EU single market. And that is particularly pronounced in areas such as HGV drivers, but it's a more general issue. There is a war for talent, as I'm sure you're all experiencing at the moment, which is the combination of the loss of access to the EU single market and the fact that something like 1 million older workers have dropped out of the labour market during the pandemic. And the latest data that we had out yesterday shows a record level of job vacancies in the economy. And then another global factor is the cost that businesses are paying for shipping is at near record levels. So that basket of supply chain issues is a huge concern and is unlikely to unravel shortly. It is then feeding into the second concern, which is about inflation. There is a huge debate going on at the moment among policymakers about whether the current inflationary surge that we're seeing, we've had the latest data just out this morning, is a short-term effect as the economy rebounds from the pandemic with demand recovering much more quickly than supply is able to do, or if there is a danger that this becomes a more medium-term effect. And you can see that this is a concern across every major economy in the world, something that the Fed, the ECB, the Bank of England, all of the major independent central banks are grappling with at the moment. And you can see from the quote here from the latest Bank of England monetary policy summary that the sort of median opinion is still that this is transitory, but that it's going to peak higher and last for longer than was originally expected. And I would say that the combination of the inflation and employment data that we've had out yesterday and today makes an interest rate rise in December an even more likely prospect than it already was. So the danger for policymakers is if they're complacent and just assume that this is transitory, that they're too slow to respond in terms of monetary policy, and these inflationary expectations then get banked in. The third issue is the COVID-19 pandemic itself. I think here in the UK, it feels that we are through the worst unless we get a new completely vaccine-resistant variant. Given the levels of vaccination, we shouldn't see the kind of exponential growth that we saw both in March, April of last year and in the new year of this year. But we do still have a fairly high level of infection. There's a big debate at the moment about whether the recent reduction was purely a half-term effect. There are cases are, as you can see from this chart, beginning to creep up again. And if we look in continental Europe, we can see they are in the middle of quite a severe fourth wave. So the impacts are not as great because of the levels of vaccination that still provide good protection from serious illness. But we see a number of European economies beginning to reintroduce some restrictions. Ireland overnight announced that it was reintroducing working from home guidance by way of example. So I think you can't rule out some restrictions over the winter, but we should be confident that we're not going to see a return to full lockdown. The fourth risk, probably the most significant one, is the risk of a UK-EU trade war. You'll all be familiar that at the moment there are ongoing negotiations between the UK and the EU over the vexed issue of the Northern Ireland Protocol, the specific arrangements to tackle the unique circumstances of Northern Ireland. And the two sides remain far apart on that issue. There is, I think, a less than 50% but non-negligible risk that the UK government will trigger what's known as Article 16, invoking the right to introduce, to basically stop applying some of the protocol measures. And if they do that, I think it is highly likely the EU will respond with a number of tariffs in the short term and possibly the suspension on a year's notice of the entire trade agreement. So far from being done, there is, I think, a non-negligible risk of heading up to what would essentially be a no-deal Brexit scenario. And that issue, I think, is reasonably immediate. We should find out where this is going to land before Christmas, because I think the negotiations will come to a head on that timescale. And then the final one, which is always much more difficult to price into business decision making, but you'll all be familiar from what you can see on the news at the moment about a number of the big geopolitical risks that are out there. And the most acute right now is probably the tensions on the eastern border of the European Union. So you have a significant Russian military build-up on the borders of the Ukraine. We had that a few months ago and tension diffused, but we can't be complacent and assume that that's going to happen again, given Russia's record in Crimea and Georgia. And we also have what's happening at the Belarusian-Polish border in terms of essentially the use of migration as an asymmetric weapon against the European Union by the Belarus government. So there are some significant geopolitical tensions out there to add to macroeconomic issues that I've just run through. So that, I think, is the sort of overall political economic context that we're working in. The supply chain inflation issues, I'm sure, very much ones that you're experiencing directly and are familiar with. But the UK-EU issue is probably the one that I would want to give most prominence to, because although I think it's a less than 50% chance, the consequences would be quite significant in terms of businesses that rely on trade across the UK-EU border. I'm going to pause there and I'm going to hand over to Jacqueline, who's going to now talk about some of the specific contents in terms of the retail sector. Jacqueline, over to you.
Thanks, Gavin. Good morning, everybody. For those who don't know me, Jack Windsor, I'm a partner in our consumer market strategy team. I'm going to shift the tone a little bit and share some thoughts from the voice of the consumer. And as context, at PwC, we conduct regular consumer surveys on a nationally representative sample for the past 15 years, actually. So it gives us a good read of what is happening across the nation. So I really wanted to share what consumers are saying to us, how they're feeling, but I think more importantly, what their spending intentions are for both Black Friday as well as the holidays themselves. So starting with sentiment, I think consumer sentiment, given everything that Gavin has talked about, has been actually relatively resilient during the pandemic. This chart shows people who are positive in terms of sentiment above the line. Negative is below the line, and the black line is net sentiment. And you can see on the far right of the chart that after the first lockdown, sentiment rebounded quickly, I think reflecting a lot of government support, including furlough, and has fallen back just recently. And I think due to some of the things that Gavin has called out. When you look at it across age groups, you see a shape where the younger cohorts, which you can see on top of the graph, are always a bit more optimistic than the older cohorts. And I think we have seen that consistently across every survey they do. They just haven't lived. On a regional, though, basis, London has historically outperformed other regions, but that has really rebalanced actually pre-COVID and during the pandemic itself. So why are consumers feeling a little bit more cautious over September and October? I think that is due to two things. One is the expectation of price rises, but also supply and labor shortages. The top graph shows in orange what people have already experienced, and in yellow what they think they're going to experience over the next couple of months. And as you can see on the first two columns, people are expecting kind of non-discretionary prices to rise and discretionary, so whether it's food or utilities. But if you look at the right-hand side of the chart, is really around supply chain constraints across the value chain, right? Whether it's empty shelves, out of stock, but indeed labor shortages in restaurants as well. And those concerns are particularly acute among the older cohorts. So if you look at the bottom graph, you can see on the far right, the 55 and the 65 plus are feeling these concerns a little bit more than the younger cohorts. So moving on to the outlook for Black Friday and Christmas. I think it's actually really promising, slightly based on low comps because there were restrictions, of course, last year, but even versus the previous year. I think consumers are just really looking for reasons to celebrate with family and friends. So looking at Black Friday first, it is back, okay? And you can see on the left-hand side, almost 60% of consumers are looking to participate in Black Friday, more so than the previous 2 years. And it's really high in London, okay? London over-indexes the other reasons. And why is that? I think, again, if you look on the right-hand side, really driven by a combination of things, whether they want to get access to stock, whether they want it to arrive actually on time, given some of the shortages that we have already mentioned. That translates into about 9 billion of spend in Black Friday. There is, and it always amuses me, some variation by gender. So men are spending about 60% more than women. Don't know if that makes us a little bit more savvy in terms of our spend or what. And we're buying for ourselves, okay? Men particularly, 75% of their Black Friday is actually self-gifting. Now, what are they spending on? You can see on the chart that is more on electricals versus last year, more on homewares, and I think that's really capitalizing on some nesting trends that have accelerated during COVID. But I think fashion is back, okay? I think fashion was the big loser, looking at non-discretionary, discretionary categories. And so it's nice to see a little bit of a return to buying and dressing up. When we turn to Christmas, we also are expecting to spend more. We are looking to spend about 20 billion, and that reflects about 15% higher average spend per person. And when you look at it on a regional basis, which is what this chart shows, you can see London on the far left spending more than other regions. And again, why are we doing that? It is that reason to celebrate with our friends and family. So buying gifts, of course, you have more money to spend given for savings during lockdown. And what are they spending on? Well, this is all back to celebrations, right? So it is about food and drink. It is about filling those stockings. And it is a little bit about fashion for ourselves and for our families. Now, online clearly has accelerated during COVID across actually all categories, even in categories where there has been a low online penetration historically. And that shift is sticky. So if you look at Christmas and Black Friday on the right-hand side of the chart, you can see some 65 to 85% will use online as a channel, whether that is delivering to your home or whether that is click and collect. And that is a big structural shift versus previous Christmases. And that is particularly noticeable in London, which has the highest proportion of click and collect. And this is really reflected in footfall. So this shows footfall by location. So retail parks is the top line. The yellow line is high street, and the bottom line is shopping centers. And you can see some of that recovery, of course, as lockdown restrictions have been lifted, but it is nowhere near pre-pandemic levels. And just to close off, does that mean the role of the store or the leisure site is dead? Absolutely not. I think customer experience is the new battleground. And what you can see on the left-hand side is, people are going for convenience when they're looking online, and they're going for service when they're looking at stores. And therefore, how do we think about the role of the physical site as the new center of gravity? Okay, and therefore, I guess what I wanted to leave you with is, during Black Friday and Christmas, how do we think about that role to serve and fulfill a customer mission, whether that's to help them, engage them, or indeed connect them with the wider community. And of course, that will look very different subject to your business model, but also how you intend to differentiate yourself on the high street. Thank you very much.
Now is the section of the session, which is our Q&A. So please do get your questions in the box below. Our guest speakers are here and they are the experts. So we've got a few in already. So I'll start the Q&A, but please do get them in as we discuss. So we're going to start with a particularly difficult one. And Gavin, I'm probably going to give this one over to yourself to start off with. So the question is, what is the solution to the shortage of low-skilled workers who are critical to London's recovery as a visitor for entertainment and leisure? It's the $64 million question, right?
You're muted.
I think you're on mute, Gavin.
You're on mute, Gavin.
You would have thought I wouldn't be making that mistake after nearly 2 years, sorry. I was saying that, look, the obvious answer would be if the government had a more flexible approach to the trading relationship with the EU and gave businesses access to more ability to bring labour in from outside. But they're not going to do that. So I think the reason it's the $1 million question is, well, what can you do given that constraint? I think that the best thing that the government could do would be to look at what it can do to draw more people into the labour market. As I was saying when I was talking about the vacancies figures that were published yesterday, there's about 1 million people that have withdrawn from the labour market during the course of the pandemic. So if the government wants to maintain a tight policy in terms of bringing people into the country, then a combination of businesses thinking about what offer they make, how attractive the jobs are to people, but also government thinking about what it can do to coax people back into the labour market. Otherwise, the current situation is just going to stay as it is, essentially.
For sure. Thank you, Gavin. The next one, probably for yourself, Megan, though you may have covered this. What is driving the stronger domestic spend in the West End? Is it being largely driven by eating out?
Well, good question. What we haven't seen is a massive increase in the data that we collect around hotels and restaurant. It is particularly those two categories, so luxury and domestic. So I think that it probably is a bit of people have saved money over lockdown. They're treating themselves because life's been a bit rubbish. So those categories are getting greater spend. People haven't been able to travel as much. There's been a lot more domestic travel, but not international. So I think people are probably just treating themselves. They are the two categories where that really has increased versus the others. I don't know, Jack, if you wanted to comment on that any further. I kind of lined you up for that one during my presentation.
Yeah, I think when we look at the consumer survey on a national basis, I think when lockdown restrictions were first lifted, the spending priorities were on eating out and travel, whether that was staycations or abroad. And that has fallen back slightly as other spending priorities have come up the ladder. But on a net basis, it was positive for restaurants and wider leisure.
Thank you. Thanks both. On to our next question. The government has withdrawn tax-free shopping from the UK, as we're all aware. Can we ever expect to get back to 2019 international spend? Megan, I'm going to hand that one probably to you first, and then perhaps others can follow.
Yeah, I think I'll tag team with Gavin on that as well. So it's a very good question. It's front of mind and very topical. I think it will be interesting to see once travel restrictions are fully lifted nationally, once COVID becomes perceivably more under control, what impact that has on international spend. There are many factors impacting that international spend at the moment. So I don't think we've seen the full impact of the tax-free shopping because people haven't been able to travel. It will be very interesting to see if that spend does go to other markets, such as France and Italy. It will also be very interesting to see if the domestic spend that we currently see in those, higher ATV categories also shifts to those markets, which I think we are all fearful of, right? I'm hopeful that international spend will climb back up because there are more reasons to come to London than just the shopping. We know from doing our on-street and online surveys with New West End Company that the tourist attractions such as cultural places and events and experiences and just being in the heart of London is a key driver of visitation. It will be whether those high-spending nations that I mentioned, the Chinese, the Gulf countries and the Japanese, whether they are still incentivised to come here. And I think we will watch with bated breath over the next, few months, once the travel situation stabilises, to see what impact that's actually having. Gavin, I don't know if you want to weigh in on that. This is, you're probably aware, this is a very sensitive topic for everyone on the call.
Yeah, I completely agree with what you said. I think at the moment there are multiple factors affecting the data. So if you're basically asking me as an exam question, will the government do a U-turn on this? I think that is possible if once some of those other factors have come out of the data, the industry can show a clear picture to government that this has done damage to UK PLC. But at the moment, it's very difficult to do that because there are multiple factors behind what is happening. So possibly, but we'll have to wait and see how the thing plays out once the travel situation is normalised.
And just on that, Gavin, I think I'd probably, put a plug in for the programme that if we can provide the evidence to the government and to the members in the West End District of the impact it is having on spend, then that gives us a foot up and a head start. So I would urge you all to please get in touch with Lucy at New West End Company or myself about joining the programme. The spend data is confidential and anonymous. It never gets shared. We never have a breach, but it does provide that fact-based evidence to understand the impact of some of these decisions that it's having. So, please do get in touch.
Thanks, Megan and Gavin. Keeping on the international theme, top 10 international spends from 2019. How has that changed now in 2021? Megan, probably for yourself again.
Yeah, so on a material basis, they're consistently, it's those three that are the high spenders when we look across the totality of the year. What's interesting to note is that at different times of the year, there will be certain nationalities that will jump up into the top 10. So most recently for the October report, we saw that the French were back there. So the French had climbed into top 10 spenders. Who knows why? I think right now it's difficult with the travel situation to see if it is just an anomaly or it's a trend. But those Gulf countries and Chinese, the key bit of information that we look at is how much they over-index versus their traveller numbers. So if there's a small amount of travellers coming in, but they make up a huge amount of spend, they are your high spenders. They will spend the most, on average in a trip. We mustn't forget the Japanese. They always feature just less prominently, but they're a very important international spender. Russia as well, probably roughly level with France, I think, in October. And then we are seeing some, decent spend. If you put Thailand, Hong Kong, Malaysia together, and then Nigeria in Africa, we do see consistently decent spend from those nations as well. I think you really have to focus on, whether you're a hotel or a restaurant or a retailer, what your target market is, because you can't capture all of them. And this insight program gives everybody the right to play. It's really up to you how you engage with your customer and your product and your price and promotion to win in that game.
Megan, it's also helpful to think about lead indicators. So we had done a piece of work actually for a duty-free facilitator. And the two lead indicators they looked at was for travel bookings, obviously for the Chinese coming to Europe. The second was actually primary consumer research among the Chinese and how sensitive they were to relative changes in pricing for some reference products such as a Chanel bag. And it's relative being the operative word, right? It's the delta between the France, Italian, and the UK numbers. But I don't think you necessarily have to wait till it manifests itself before then going to the government.
Thanks, Jack. Despite the lack of our international travel, we do mention that in our reports, 2019 December, Christmas trading was very domestic from the spend perspective. Are we expecting the same for 2021? Megan, I'm afraid you again.
That's okay. What number question is that, Dee, so I can just read it one more time? 7. Okay. So, question is, December 2019 was very domestic. Is that also the expectation for this year? Yes, I would absolutely say so. Travel is still significantly down on 2019. It is usually a domestic market anyway. Actually, 2019, I was surprised at how much international spend there still was. But given the travel restrictions, the fact that last year a lot of people couldn't be with their families, whether that was international or domestic, I think everybody will be going home. And so we do expect it to be a wholly domestic market. Don't know if you've got anything else to say about that, Jack.
No, I agree with you on those, what is happening.
Okay, next question. We've probably got time for a couple more if anyone is thinking about getting them in. With the predictions of an increase in international visitors, is there need for government to spend on an international marketing campaign? The UK currently spends half of Paris and Berlin's marketing budgets and a tenth of Singapore. Good question. Who wants to answer that one?
I mean, my short answer is yes,
For sure.
100%. But I say that as, somebody who is effectively a New West End company member. There is a huge amount of evidence and research in every single industry around what marketing spend can translate to actual conversion. You don't have to be a rocket scientist to figure out that if you communicate with more people and, on a continuous basis, to fly the flag, to get them into London and spend their money here, then that should translate to increased visitation and spend. I'd probably look to Gavin to see if you've got any comments around government sense on this and whether the government actually does do any benchmarking against other regions such as France and Singapore. Is this something that they would look at?
So I definitely think it's something they would look at. I can't answer your detailed question about whether they do benchmarking or not, but they obviously have the broader Great Britain campaign to attract investment into the UK. It's definitely worth talking to them about whether it would be possible to do something under that banner, or and certainly I think that they would be interested in comparisons of spend with some other rival destinations around the world. I suspect that the one political sensitivity they would have is doing something that was just about London, because obviously politically at the moment they've got to sort of focus on levelling up and trying to spread growth evenly across the country. So that doesn't preclude doing things to promote London, but they would probably want to look at promoting a number of possible destinations in the UK as part of any programme, I suspect. It's probably an easier win, Megan, than the tax changes we were talking about earlier. So it's definitely, I think, a good short-term thing to pursue.
Thank you. Off the theme a little bit, but do tourists concern themselves with the cost of travelling in and around London? Does our transport system have a good reputation internationally? That's a tough one. Who wants to answer that one? No one.
Not me.
Any insights?
So I think one thing that we did see with our on-street surveys and obviously online surveys over the last few months is we asked the question a lot about what the barrier was of people travelling into the West End. And one of the key concerns, as you would expect, was catching public transport. Most recently, we went to an on-street survey where we surveyed international customers on the street. Travel wasn't a concern. And the waves that we've been doing for the last couple of years, when we ask people things that deter them from visiting the West End or the things that they would like to see an improvement of, the travel has never figured in that. They've wanted more access to toilets and facilities, as you would expect. Wi-Fi has been one of the key things, and New West End Company is working on that. That also ties to using mobile payments, and we saw that a few years ago that we couldn't take the Chinese spend because we didn't accept Alipay and WeChat, so we're working on that. But the London transport actually never features in any of those responses, which I think is a good sign. But COVID has probably changed that a little bit.
When we conducted a survey, just to build on that, Megan, about just considerations or concerns, just shopping, not necessarily in the West End, but just shopping in store, the three that they raised was, one was, what are the hygiene standards of the store? And then how do we get contactless service, i.e. can you book a meeting room or stock to try on in advance? And the third, as you mentioned, was contactless payments. But again, it wasn't the travel, it was the store environment itself.
Yeah. Thank you. I should mention from our first round, as Megan said, of on-street surveys that we conducted in September, October. So it's our first on-street survey since January 2020. We've got a happy bunch of people out there. They are, sentiment and satisfaction has really increased across that period, which in one way is quite surprising, but in another way, maybe that does, that is a testament to all of the work we have been doing in the West End while we've been closed to get it shipshape and ready for all of our visitors, whether domestic or international. Okay, so that's probably all we've got time for our questions today. Thank you to all of you for logging in and to all of our guest speakers. If anyone is interested to hear any more on the subject, please do get in touch. Equally, a last plug for the programme, if any brands are on the call and would like more information and to become one of our participating members to get our more detailed monthly reports, please do get in touch with myself or Lucy. We'd be delighted to get you signed up. And as we step into our 2021 Christmas trading period, I wish you all the very best of success, and I hope to see each and every one of you across the coming months. Thank you for joining.